Good evening, ladies and gentlemen. Welcome to our weekly investor update. I'm your host, Dan Theok, SVP of Investment Banking. We're happy to bring you another weekly update. Those of you who've been following us for some time will recognize Brandon Thomas, Investment Advisor, and our co-host for today. Welcome, Brandon.
Thanks, Dan.
Good to have you back. Brandon will be presenting on Express Catering Limited, and the second company, Lumber Depot, will be presented by myself. So stick around for that and more. And if you're a fan of the content, then don't forget to hit the bell to stay up to date with the channel. We upload content just like this every week. Also, if you're looking to embark on your very first investment journey, you should take the first step with Mayberry. Follow us on social media to learn more about how you can get started today. Well, without further ado, let's get going with the first presentation today, Express Catering Limited by Brandon. What do you have for us, Brandon?
Thanks again, Dan. So today I'll be presenting on Express Catering Limited, and to do a quick review, Express Catering Limited is the company that controls and operates all the food concession stands and beverage stands post checkout in the Sangsters International Airport. And to get right into the numbers, we have two sets of numbers to present on today. So just today, we had a release from Express where the first quarter results came out, and we saw where their revenue is up 35% year over year. Their net profit is up 16% year over year, and we see where the oncoming of new visitors to the island and therefore departures out of the island is causing Express to grow nicely over the last couple of years. We see where their year-end results, which was released some time ago, they were up 223% in terms of their revenue. Coming out of the pandemic, obviously they would have suffered some losses and some, less travel. Therefore, we are now seeing a rise in tourism and a rise in the amount of departures coming out of that airport. Now, Express has stated, their intention, and they're currently under construction to build some more concession stands and some more concession restaurants and beverage outlets for persons to be able to take part in. So Express Catering Limited has said they're going to be increasing that number from 24 to 31. Now this increase will allow for them to access 100% of the departing passengers versus 70%. So this will, bode well for their revenue and their profitability moving forward. Moving on to the next slide, we're looking at their quarterly profit performance, where we see where obviously, pre-pandemic, we saw where they were profitable, and then as soon as, the pandemic happened, we would have seen that they were experiencing a lot of losses. And we're seeing where they're now beginning to stabilize, and moving forward, we expect that to continue to grow. Now, this summer, the June to August summer, would have experienced 5,000 more visitors to the island, more than 2019, which was a record year for us. So, and we also experienced 20% more in tourism spend. So all of us know that things cost more now than they did in 2019. So that should also bode well for Express as more visitors come into the island and therefore depart out of that airport. And as more money is being spent for these meals and these beverages, we expect Express revenue to continue to rise moving forward. So looking at the share price movement over the last couple of quarters, we've seen where year to date it hit a high of $6.94 and a low of $4.80. It is trading evenly about at $5.54 right now, and that gives us a PE of 50.52 times. So the PE is rich at the moment, but we expect as profitability increases and I get rid of some of those losses on the books over the coming quarters, we expect that PE to drop significantly. Now, I am a bit concerned with the finance costs. Just this quarter alone, the finance cost was, upwards of 500,000 US, which would have definitely lessened their net profitability. But as I mentioned before, as they experience more visitors, more spend per visitor, and as more outlets are being built, and that should be completed by the end of this year, and I expect a lot more revenue to come in for Express moving forward. There's thousands of hotel rooms that are being built and obviously that is an indication of the coming demand that is expected. So I definitely have high hopes for Express Catering Limited, and I'm projecting, revenues of this year in upwards of, their 2019 record of about 18 to 19 million USD. So, Dan, you have any thoughts on Express?
Yep, no, listen, I'm in love with the tourism space in general. So my number one stock is CPJ by far. And I think a distant second would be Express Catering Limited. And the bet is because we know they've had years pre-pandemic where they did very well in terms of profitability. I think peaking at maybe $4 million profit, paying great dividends back then. They've been really hit hard by the pandemic, carrying a fair amount of debt. So when sales slows down, that's a problem. But as you said, there are two great positives for them. One, tourism is booming. We have 3,000 hotel rooms under construction currently. I expect 6,000 new hotel rooms in the next 3, 4 years, and that just means much more traffic through the Montego Bay Airport. And then secondly, they're expanding in the
Yeah.
Montego Bay Airport. By coincidence, I flew out of Montego Bay on Friday and it was just buzzing. So I have every confidence that they're going to get back to very strong profitability. That P is going to return to normal levels. And I would say over the next 12 to 18 months, you could see the stock price getting back up to that high of $7 when it would be justified. So this one's a good medium term, long term outlook if you believe in tourism,
Yeah.
which I strongly do. So this is a great stock for the medium to long term, despite being a bit rich now. I have every confidence that the profitability is going to come back in the business because Montego Bay Airport is just a great place, and that's where most of the tourism North Coast traffic comes through. So I have every confidence that this is a good one for the medium to long term.
Agreed. Yeah.
All right, well, thanks for that, branding. Okay, moving right along. Next one up, I believe, is Lumber Depot. Now, lumber is another one of my favorites. It's certainly in my top 10 personally. From the day it IPO'd back in November 2019 at $1.20, I was in love with this stock. Couldn't get much at the IPO stage. It was one of those Mayberry IPOs that sold off in a day. And I bought an average price at $1.88, and I've never looked back. Stock's trading today at $2.88, which is a very low PE of 12.68 times based on its current EPS and trailing earnings of $160 million. Now, let's just talk a little bit about that. In the last quarter that just came out to July 2022, they did 48 million for the quarter net profit. And although that's down from the prior quarter last year by 33%, where they did $71 million, I think what's important to note is their trailing earnings is about 160 million, or on average 40 million a quarter. So throughout the pandemic, they've had ups and downs, supernormal profits, and some quarters that were tight, which we'll see on the next slide. But in general, you can see that as things are normalizing, they've done $48 million despite 5% falling sales and so on. What I do like about lumber, though, over the last 2.5 years since they privatized, is they've grown their balance sheet from retained earnings of only $22 million when they first got started, now to retained earnings of over $350 million. Similarly, shareholders' equity started very low. They only raised $170 million back then from that IPO, and they've sort of grown their shareholders' equity mainly because of the profitability by $300 million in the 2-year period. Total assets up to $649 million. Last year, previous fiscal year ended 21. They bought the building that they were previously leasing for $160 million cash. The business continues to throw off substantial amounts of cash. They have over $250 million of cash and investments in that balance sheet of $640 million of total assets. They've got a great strategic location up there in Papine, and they have enough cash to go and buy a new property, a new location, and build out. Imagine if they're doing $1.6 billion per annum in sales from one location, what would happen if they were able to add a second location and get other benefits. So I think this is a great company, poised for growth. Even at their current location, even if their sales just held flat at this kind of $40 million per quarter, the stock is still undervalued at 12.68 times. Junior market averages 17 times. If I just adjusted the stock to go to the junior market average of 17 times, I get a price of 386. But I do believe junior market average PE multiple is low at 17 because of the high interest rates. So when we think about, hey, is the high interest rate regime likely to come to an end in the next 6 to 9 months? And I think the answer is yes. We could see the PE multiples going back to 18 to 20 times. At 18 times, this is a $4 stock. At 20 times, this is a $4.50 stock. So still a great buy at $2.88 up to $3 because this stock, mark my words, in the next 12 to 15 months is going to be back up at the $4 space minimum. So that's 35, 40% growth potentially. And as the PEs go back up to 20 times, in my opinion, we're going to see this guy going to $4.50. So still a great buy, still going to get you some great location, lots of cash. Did I mention that they're either going to have to start paying super dividends or go out and acquire something because now they're just stockpiling and building up lots of cash and investments. So this is a great company led by Jeffrey Hall as chairman, a great team behind it. Mayberry Foundation is one of the top 10 shareholders, so let me just declare a little bit of interest there. But it's just a great company. From IPO to date, this thing has not disappointed, going from $1.20 to 288 and still having a lot of potential to growth. On the next slide, we sort of show you what's happened in the quarters. Like I said, during the pandemic, they had at the start of the pandemic some breakout super quarters, I think because they were able to take advantage of some of the pricing with the old stock selling it at the new stock prices. And then things have sort of regularized now to where you see them doing, anywhere from 40 to 48 million a quarter. So it's stabilized over the last 4 quarters. I still think we're going to see a little bit more growth. I mean, construction is obviously booming in Jamaica, and they've got a great location. But what I like most about this, especially with a chairman like Jeffrey Hall, who's really strong on growth and acquisitions, and we see the stuff they've done over at Kingston Wharfs, Jamaica Producers, this company is poised for growth. And adding one more strategic location, they could double their business. They got no debt, 200 million, $250 million of cash near cash. They bought their existing location for $160 million. So just imagine for $250 million, Brandon, they could go and find a new location, take a little bit of debt, put in some inventories, double their revenues, potentially double their profit. It could be an $8 stock in 3 years' time. It has that kind of potential for growth, but it's doing exceptionally well as a one location hardware store. I'd like to see them go and expand and find a good location where they can use their assets, their experience, their purchasing power, their relationships with the suppliers, their know-how to be able to blow up this business. Next slide shows how the stock price has traded in the last 2 years. You know, uh, Started a pandemic, it went back down to lows $1.48. And then, if you got yourself some at $1.48, $1.50, you'd be in a good stead. And it's traded as high as 417. I have no doubt in 12, 13 months we'll be back up to $4, potentially 450. As I said, depends on whether it's going to be a 18 times PE or a 20 times PE. But this is just a great stock for you to go and buy now, folks. It's really trading cheap at 1268 in a market where the average is 17 times. Those are my thoughts. Brandon, what do you
Yeah.
have to say?
Nah, I couldn't agree more. Lumber is definitely undervalued by any metric at the moment, and I am looking forward to the potential that could come from expanding to a second location. They mentioned that it could be via acquisition, or they could, find a space where they'll build from the ground up. So either of those options, once it is in a key, geographical location, I expect them to more than double, their current output. And as cost of some of these raw materials come down, that they import, I expect them to be able to return back to their margins, and that should bode well for their profitability moving forward. So high hopes and positive for Lumber Depot.
Okay, excellent. I think we're agreed. Okay, so that completes our review of Lumber and Express for today. But I think we also have some nice tips to get from Brandon. What do you have for us today, Brandon?
Thanks again, Dan. So my tip today is about controlling your temperament. So here's a quote from Warren Buffett that says, "The most important quality for an investor is temperament, not intellect." So, you need to have a temperament that neither derives great pleasure from being with the crowd or against the crowd. What this says to me is that, no matter how much degrees or PhDs or whatever you have, that's not the most important factor in investing. It's about controlling your emotions, sticking to your convictions, doing the research, and making the best and objective decision about a company prior to investing. So that's my tip. Control your emotions. Don't follow the crowd. don't get caught up into FOMO, and you'll do well in this investment journey. So that's my investment tip for today, guys. Thank you.
Thanks for that, Brandon. I couldn't agree more. And, why this resonates well with me is because you've got experts like Mayberry to give you the advice that you need to grow your portfolio, but you got to have the temperament and the patience to wait on the goals and the strategies to come to play. I think I've said this before. I remember having a client who gave me 40 million to invest 3 months before the pandemic. And then 3 months into the pandemic, he panicked and asked me to give him back the money, which I gladly did. But I did caution him to say, look, this is going to be over in 12 to 18 months. Market's going to come back. And sure enough, 18 months later, he was calling me to say, hey, I want to go again. And I kind of said, I don't think you have, I'm not making this up, the temperament for this type of market. And the markets are back up. If he'd held his portfolio, he'd be up 40-50%.
Yeah.
But you got to have the patience to play the game, to invest in the market, and just get yourself a trusted advisor like somebody here at Mayberry. But it really is important that you're in this for the medium to long run. And I can assure you that the stock market, equities, is one of the best asset classes that you can invest in. So thanks for that.
Yeah.
All right, folks. Well, that's it for today's discussions. I'd like to thank our viewers for tuning in today. Your support is always appreciated. I'd also like to thank my fellow panelist, Brandon Thomas, for his contribution to today's discussions. Thanks, Brandon. If you're curious about updates on our virtual investor forum, then find us on social media. We share live stream dates and upcoming guests on our social media pages, so follow us there for all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click on the bell to receive all notifications. Well, folks, keep safe, and remember, wise investors, slow and steady wins the race. Goodbye.